Welcome traders to yet another educational video of Nifty Short Term View. And we can see today that overall all of the major sectoral indices have closed in the red. In fact, in intraday, there was only one index which I was tracking continuously, which was the FMCG index. It managed to stay in green for decent long time, especially in the early opening. You can see that there was a big spike in the hourly chart, but nevertheless, later on as the day progressed, you can see prices came down. And if you compare the FMCG closing price in terms of percentage with all other sectoral indices, I think it has certainly outperformed by falling less. And the major contributor to this correction has been the PSU banks and especially the metal pack, and one more is the realty pack. And I believe if someone is surprised by this correction, I would say I'm certainly not surprised. Yes, I'm certainly surprised with the extent of the speed or the velocity with which you can see Nifty futures have corrected from almost 18,000 to somewhere around 17,474 just in a matter of 2 days. But I feel this correction was certainly needed and some consolidation was needed because we had a very good rally and the overall prices, if you can see, they have almost rallied by 19% in a matter of 2 months. So some sort of consolidation or a correction is a good welcome over here. All right. Now, in terms of trend, I would say that the state of trend in the daily time frame chart is currently flat. The trend is no more in an uptrend, and the trend in the hourly chart is certainly down. Now, this particular support band, which I had shared on my Twitter handle as well, I think it has been broken on closing basis. It is from 17,706 to 17,508. The next support band, which could be tested if the correction continues in next couple of days, will be 17,343, which is the 23.6% Fibonacci retracement of this entire rally from 20th June to, you can say, 18th August 2022. If you see properly in the hourly time frame chart, the RSI is well below 30. In fact, it is below 25. It is at 2340. And if you have a look at the 15-minute chart, you will certainly see some sort of positive divergence developing over here. So it is very difficult to say as of now whether we'll have a intraday pullback tomorrow or maybe day after tomorrow or not, because the speed of the selling is very, very high. But in case if we do have a pullback or something like that, then immediately the first level which could act as immediate resistance for the short term will be 17,700, and this entire band from 17,689 to possibly 17,800 or 810, this could act as immediate resistance. And on the downside, I have shared the supports which are at 17,355. Overall, it is a time when intraday volatility, choppiness, or sideways move or correction, again a pullback, all these things could continue for few more days. The reason for that is on the upper hand, we are capped by resistance, and on the lower hand, we do have some decent supports. So generally when markets are between support and resistance, all these things can happen. Number of trades should be reduced considerably until and unless you have something really mouth-watering on the charts or something like that. I think one should stay aside. In fact, even positional traders should concentrate on their positional long trades which they had initiated earlier. And in case if there are any trailing stops which get hit, one should respect the market and come out. Let's have a look at the Bank Nifty chart. Bank Nifty chart, luckily it has been protected, and the downside got capped somewhere around this lower band of this support band. And this lower band of the support band is at 38,227, and you can see this readings over here, and Bank Nifty has been able to close just above it. And this is in fact the 23.6% Fibonacci retracement also. That is why the importance of this lower band of the support band is very, very high. Now, again, if you see in the hourly time frame chart, RSI is extremely oversold. If you have a look at the 15-minute chart, there is a possibility of a positive divergence. It's not very strong even in Nifty and Bank Nifty, but nevertheless, we do have some sort of positive divergence. Again, we have to believe with a pinch of salt that if in case if there is a pullback, I think the first level which Bank Nifty futures need to take off is 38,500, particular this level and this week it needs to take off. And if this pullback is successful, it could be short-lived. I don't expect it to be very long because overall we are in a consolidation phase or a correction phase, whatever you can say. And if this pullback happens, then the levels which could, give a very strong short-term resistance to Bank Nifty futures would be 39,076 to 38,853. All right. So again, in the Bank Nifty futures also and overall in all the other stocks, in all the sectors, number of trades should be reduced and only initiate trades if something is extremely mouth-watering. And in fact, I would suggest this is the time to pay attention to your, earlier long positions which you had initiated for next few weeks or maybe months. And if any stops are getting triggered, please get out of the trades and then wait for new direction by the price itself, because generally after a very big and a sharp rally, it is possible that we will see some profit booking or consolidation. All right. So I hope this educational video has helped you to understand important levels and support and resistance bands in the market and general view about the market, that how markets could pan out in the next few days. All right. So trade less and trade wisely. Thank you.